Oil prices are extending their rally at the end of a third volatile week of trade. That is after slim progress in peace talks between Russia and Ukraine, which is raising fears of tighter sanctions and a prolonged disruptions to oil supplies. WTI is now trading at $106 a barrel, and Brent stands at $109 a barrel. Brent surged 9% on Thursday, in the largest percentage gain since mid-2020. Despite the rebound, both benchmark contracts have dropped from 14-year highs hit to nearly 2 weeks ago. For more on this, now let's go to Susannah Streeter in Bristol. She is Hargreaves Lansdown's investment analyst. Susanna, many thanks for being with us today. So, many things happening at the same time. I mean, the supply crunch from sanctions on Russia, but also the stuttering nuclear talks with Iran, shrinking oil stockpiles, and again, worries about a surge of COVID-19 cases in China. All these things have actually very different impacts on oil prices, driving the prices in very different directions. I mean, in the medium term, what do you think will have the bigger impact?
Well, I think right now, as you say, there is this real push-pull of various different factors. I do think in the short to medium term, the outcome of the situation in Ukraine is set to be the kind of key determiner of what's happening with the oil price. That is, of course, without any kind of breakthrough in terms of the Iran nuclear talks. Now, as far as China is concerned, there is real worry about the effect that the mass lockdowns will have on Chinese growth. However, I do think it is more limited than we saw, for example, in the first waves of lockdowns, because many companies already have different supply routes in place. Some, such as Foxconn, have hubs set up on those campuses where actually workers can live and work at the same time, so minimizing the disruption. So overall, there is likely to be less of an effect of the COVID lockdowns in China than the first time around. Nevertheless, that is still an impact. We're already seeing this impact on what's happening with the oil price in terms of the concerns about a slowdown in China. But I do think in the medium term, it is the situation in Ukraine, and that really does seem to be moving the dial in terms of the up and down movements we've seen in the oil price over recent days.
It is true, Susanna. We are already seeing the impact. And against this backdrop, the Fed might increase rates 7 times all in all this year, 3 more times next year. And so could the Bank of England. Is this realistic? I mean, could this trigger a real economic slowdown in the US and not only, or a potential recession for 2022?
Well, at the moment, the financial markets certainly have been encouraged, really, by the fact that the Fed and the Bank of England have followed through in what they said that they would do. Inflation is the big bugbear that is really concerning investors right now. The worry is that it could get out of control. So by making these pretty aggressive moves, or actually saying they're going to do so, that actually has led to some kind of confidence that actually central banks might have more of a handle on inflation. Obviously, policymakers are in a tricky situation. There is still these events unfolding in Ukraine, which are having repercussions for economies around the world. But the figures that have come through in terms of the labour market, in terms of retail sales, other indicators appear to show that the US economy in particular is buoyant. And so policymakers right now feel that it can withstand the slightly more aggressive tightening. We'll have to see. They'll be keeping a keen eye on what happens and whether this will choke off growth too much. But they certainly are convinced that it's the right path to take right now.